Okay, so welcome to the deep dive. Today we're going deep on something that could really shake things up, reciprocal tariffs.
Yeah, you scratch my back, I scratch yours, but with taxes.
Exactly. And it's not just theoretical. It's actually looking like it could be a big part of trade policy in 2025 based on everything you sent me.
Yeah, your sources really lay it all out from like the core ideas to some, real world possibilities, even immediate market reactions.
Right, so we're going to try and cut through all that and help everyone understand what's really important about this and maybe even a few things that are kind of surprising.
Totally. I think we can do that.
Cool. So we're going to cover the mechanics of these tariffs, the rationale behind them, potential economic ripple effects, good and bad, how other countries might react, historical parallels, expert opinions, the stock market's initial response, all tailored to provide a clear and insightful understanding without overwhelming the listener.
Let's get into it.
All right, so first things first, what exactly is a reciprocal tariff?
So basically, it's mirroring tariffs. Say another country hits us with a 6% tariff on, I don't know, widgets.
Widgets, right?
We'd put a 6% tariff on their widgets right back at them.
That way, tit for tat.
Exactly. Now, the U.S. Trade Representative, or USTR, they've got a more specific definition, tied to balancing trade deficits.
Yeah.
Basically, they're aiming for a certain percentage reduction in that imbalance using these tariffs. There's a whole formula for it, but that's the gist.
So it's not just about matching product for product then?
Not necessarily. You can do it that way, but the buzz for 2025 is more about country-specific rates. It's based on the overall trade gap with a particular country.
Interesting.
Yeah, so think of it like this, a baseline tariff of maybe 10% on most imports. Then you tack on higher rates for countries with, really big trade surpluses with us, or if they're slapping big tariffs on stuff we send them. The goal is to level the playing field, protect U.S. industries, and get more leverage in negotiations.
And there's a big push in 2025 for boosting U.S. manufacturing.
Huge emphasis on that.
This sounds a little familiar, though, doesn't it? Like what we saw from the previous administration.
Yeah, there are definitely some parallels. That whole fair trade rhetoric, the America First agenda, bringing back manufacturing jobs, that was big then and it's echoing now.
Right, and they actually did put tariffs on steel aluminum, kicked off that trade war, with China renegotiated NAFTA into the USMCA.
And even before this whole reciprocal tariff idea, there were already tariffs in place with China, Canada, and Mexico. So they've been using tariffs as a tool.
So how likely is this wider implementation in 2025 then?
Based on everything we're seeing, the rhetoric, the past actions, I'd say very likely. There's that announcement back in February 2025, and then the executive order in April. They even called it Liberation Day for trade.
Wow.
Yeah. So we're expecting that baseline tariff, likely around 10% plus those higher rates for specific countries.
And do we know what some of those specific rates are?
Oh, yeah, we got some numbers. As of April 2025, Vietnam was looking at a proposed 46% China, 34% on top of what was already there, the EU 20%. Canada and Mexico were interesting, 0% for goods that comply with USMCA, but 25% for everything else, and Lesotho was at 50%, really targeted.
Wow. So those tariffs go up? What happens here in the U.S.? What does it mean for everyday folks?
Well, the big word is inflation. These tariffs are basically taxes on imports, and businesses are probably going to pass those costs along to consumers. So we could see higher prices on pretty much everything, your morning coffee, the electronics in your pocket, the clothes you wear, you name it.
Oof.
Yeah, experts are predicting some pretty significant increases in household expenses.
Okay, so how will this affect different businesses? Will some be hit harder than others?
Absolutely. It's not going to be even across the board. Companies that rely heavily on imported parts like car manufacturers, electronics companies, they're going to face higher costs.
Right.
Now, some U.S.-based competitors might actually see a boost, at least in the short term, but even they'll likely see their own input costs rise as well. And then you have agriculture, which could be really hard hit if other countries retaliate with tariffs on our agricultural exports.
That would be bad.
Yeah. Now, there might be some exemptions for certain sectors, maybe pharmaceuticals, semiconductors, things that are considered critical. But the tech industry as a whole is pretty nervous since so much of their manufacturing happens overseas.
Interesting. So what about the rest of the world? How are other countries likely to react to all this?
I think it's safe to say we can expect some strong reactions. China has already said they'll take countermeasures. The EU has vowed to retaliate. Even Canada intends to fight these tariffs. There's a lot of disapproval from major trading partners like Taiwan, Australia, and others.
So basically not many fans of this idea.
Not really. And this kind of sets the stage for potential trade wars where countries just keep hitting each other with tariffs.
And that just disrupts everything.
Exactly. Supply chains get messed up, global growth slows down. The Smoot-Hawley Tariff Act back in the 1930s, that's kind of a cautionary tale of what can happen when tariffs get out of control.
Didn't that lead to like a total collapse of global trade?
Pretty much. So yeah, there's a real risk of things spiraling.
Okay, so are there any historical parallels or lessons we can draw from past attempts at using tariffs?
Definitely. There are a few historical examples we can look at. The Cobden-Chevalier Treaty between Britain and France in the 1860s, that's often cited as a successful example of a targeted trade agreement. But then you have the Smoot-Hawley Tariff Act, which we already mentioned, a classic example of how broad retaliatory tariffs can backfire.
Right.
And the U.S.-China trade war in recent years, that's another example of how disruptive these things can be. It's really a mixed bag historically. Some experts argue that tariffs are a necessary tool to create fairer trade and give the U.S. more leverage in negotiations, but others warn that they lead to higher prices for consumers, hurt economic growth, and ultimately damage U.S. exporters as well. There's also the argument that trade deficits are more about macroeconomic factors than, unfair trade practices.
So a lot of debate on whether this is the right move.
Big time.
Okay, and what about Wall Street? What was the initial reaction from the stock market?
Well, the market did not like this news one bit. When the announcement dropped on April 2nd, U.S. stock futures immediately dipped. And all the major indexes, the Dow, the S&P 500, the NASDAQ, they all took a pretty big hit. It was shaping up to be one of the worst days for the market in years.
Yikes.
Yeah, trillions of dollars in market value just wiped out since February. And it wasn't just a few sectors. It was broad airlines, manufacturers, retailers, tech companies, banks, all getting hammered.
Wow, so a lot of fear about what this means for the economy.
Definitely. There's worry that consumer spending will drop, that we could be headed for a recession or even stagflation. The dollar weakened too. Despite attempts to downplay the market's concerns, it was a pretty clear signal that Wall Street is not on board with this plan.
So big picture, it seems like this deep dive really paints a picture of a potentially major shift in U.S. trade policy with a ton of interconnected consequences.
Absolutely. We covered the nuts and bolts of how these reciprocal tariffs work, the strong likelihood that they'll actually be put into place, the potential for higher prices and economic disruption here in the U.S., the very real risk of trade wars breaking out globally, those historical parallels, different expert opinions, and of course the financial market's very clear initial apprehension.
So a lot for everyone to think about.
hmm
Based on all this, what parts of your daily life do you think will be most affected by these reciprocal tariffs? And are there any ripple effects you can think of that we didn't really cover today? It's really fascinating and a little scary how complex this all is.
Yeah, and I think it highlights just how interconnected the global economy really is.
Exactly. Thanks for joining me on this deep dive today.
My pleasure.
And to everyone listening, thanks for tuning in.